Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Wednesday, May 3rd, 2023. It's now 6:35 a.m. Central Time. We start off in the S&P 500 daily chart in DeMark looking back to end of December 2021. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential sell setup 4 count. And to negate that for end of day today on the 3rd, there must be a close below 4135.35 for the price flip to the buy setup count 1. This propulsion 50% momentum up could become qualified today with a close above this level. And price in the pre-market hours for the S&P 500 at 6:38 a.m. on the 3rd is 4130. So it's fast approaching that level for printing the setup count 5. Of course, there must be a close above at end of day today to print the 5. Now I want to point out something that I didn't know or just never observed before in DeMark here in the daily chart from the 28th. You can see that the sequential buy countdown 12 was printed here a couple days before that date that I have stamped here, which was Friday, and price would have needed to tick lower and close lower than this bar 8 here for the setup countdown for sequential. And because this bar here on the 1st closed above this qualified by TDST here that became qualified on the 17th and had a true low above this level here, and true low meaning that this low was lower than this close on the 28th, that this sequential buy countdown was negated because of that. And again, that is something either I've never seen before or just did not notice. Normally, if there's a buy countdown such as this here started, and there was a 9 end count here, and the count was after that 9, then once we print another 9 end count for sell setup going the other way, meaning up here a sell setup count, then that disappears if it hasn't reached the 13, such as this. So back when this became qualified and confirmed, this by TDST line, I said that's an indication of continued uptrend eventually. Of course, we had a little bit of a downdraft, and then if price would have gone below this and printed the buy countdown 13, then that would have been an indication of more continued upside, as that is a sign of exhaustion of selling. And with that rule turned off about the true low here and the TDST, with that turned off, yesterday would have printed the sequential buy countdown 13 here as it ticked lower than the close over here for the countdown 8. And as long as it did that and met the rules for printing the 13 from the closes, it printed, and it did. You can see the close 41.1958 is above the close over here for the bar countdown 8. So let's see if the propulsion momentum up for 50% becomes qualified today, and be warned that this 50% propulsion momentum up is not a sanctioned DeMark indication. They use the 100%, but I use the 50% and the 100% exhaustion factor for propulsion, as it gives us a early warning as to an indication of direction for momentum. So take that with a grain of salt, but I've always found it to be very, very useful. And if there really is some truly decent upside for today and the 3rd, and get a close above this ongoing supply line, that will become qualified for end of day today with a close above it. I'm still saying that, let's say it doesn't get qualified today and another day in the future it gets disqualified like this line here, then we'll have these two disqualified supply lines. I will consider that a fading opportunity, even though there's no indication of exhaustion to the upside by setup counts and countdowns. And this is getting really close to the 4,200 level, and the high of this bar in the weekly chart, you can see the high there, 4195.44, and get a tick higher than that, and the D wave up wave 3 will print, and then, like I said in the previous video, we'll have higher highs and higher lows in both the weekly and daily chart. And this ongoing demand line for today, its level is 4080.95, and it would require a close and an open below this level for any chance to get it qualified. So again, if price opens above it and subsequently closes below it, this ongoing demand line will become disqualified. And the lower start band for today is above the channel 3 low, and the lower start band is at 49.10, and to print the D wave up wave 4, price needs to tick lower than 49.35, so it's right there. And if you've been following along, the projection 61.8 Fibonacci retracement for D wave up wave 4 is at 4098.91, so that was beaten yesterday with a tick lower than 4089.72, and that does not happen too often either. If I've ever seen that before, where the projection gets met before the D wave up wave 4 gets printed. So once that gets hit and prints the D wave up wave 4, it is validated by the 61.8 Fibonacci projection that was hit up here. The NASDAQ 100 NDXHILO chart, there really was not much changing since the previous video, but we'll look at it anyway. Same with the other ones, the NASDAQ Composite and the New York high lows, really no changes. The 5 EMA in blue here is about to go under the 21 EMA in gold. So I would say if the blue and the red can get under that gold, then there's some pretty big trouble brewing. Other than that, we're going to keep an eye out to see if the index line and dotted here itself turns around and heads back to the upside. And let's see what happens here, if that can coordinate with bouncing off of that 21 EMA. The ROC 12 is at negative 7.34, so that's below my plus or minus 5 from zero rule there. And really no changes in the KSTs. Maybe the long-term KST is leaning to the right a little bit, but it had quite a trajectory upwards. And the short-term KST did go under its red signal line over here. You can see KST is at negative 25 about, and the signal line is at -7, so it is below its signal line and below zero. Not a good sign, but close enough to turn around and get back above zero in its signal line. The S&P 500 support and resistance levels big board chart shows the gray areas at the daily conversion line, 20 simple moving average, and the pivot point. And price in the pre-market hours at 7:38 a.m. on the 3rd for the S&P 500 is 41.28. So to the downside, the closest level is this 21 EMA. Break through that and we're out of the 4100 level zone and down into the 4000, and there's the weekly diamond bottom extension, perfect uptrend channels bottom line there, the ongoing demand line, and S1. And to the upside, it takes a pretty good jump up to R1, and then the top of the range, 4164 approximately. The S&P 500 daily chart managed to stay above its 21 EMA signal line, but not the daily NASDAQ 100's AD line. It fell below its 21 EMA signal line. And the ROC 1 went below its negative volatility line, which is at -1.0. ROC ended up at -1.16. ATR2 went back above its volatility line at +50, and it's at 57.99. And the PPO Extreme deteriorated a bit. It's back below 3%. Next level up is to get back above 2.99%. And then underneath there is the PPO level 6 at 1.67% to the downside. The New York traditional McClellan breadth oscillator deteriorated quite a bit. It would take 1,684 advancers over decliners to get back to zero, and yesterday it was 110 required to get back to zero. Have a great day.